Hello, everyone, and welcome to this week's watch list review. Usually I do these Friday afternoon, but still not feeling real good. I actually logged into work Friday morning for a couple of hours and just was feeling miserable. So I shouldn't say miserable. I just had my whole body was aching. Anyway, I spent the day laying on the couch, and I feel a little bit better in that sense, but um, I get real nauseous about a half hour after I eat. So something going around, but I'll get through it. Anyway, here's last week's watch list. Uh, we had most of the stuff looking to go to the upside: Oxy, XLE, CVX, Zillow, CVS, and Devon Energy. So a quick glance at them Thursday or Friday when I looked at them, a quick glance, it looks like every one of them triggered and at least hit target one. But I didn't check the shorter time frames to see how they played out in reality. So let's take a look and see how it was. Obviously, the markets didn't play well again last week, but there was a lot of opportunity to make money in that time. So here's what we were looking at last week on Oxy, looking for a break to the upside. Target one was 68.83. Actually, that's not accurate either. 64.98 is target one. Target two I didn't label was I added that later. That wasn't on here because I didn't have it on here, so I added that later. But I'm not sure where I got that number. Maybe from previous high. Uh, Not real sure. But either way, um, I had target one being 64.98, and further targets being either the broadening formations, moving averages, or reversal signal on a shorter time frame. So let's take a look at the 60 and see how this played out in real time. Uh, Go back to Monday. Here we are, Monday. So we gapped above the trigger, and then we pulled back and almost touched it. The low was 64.51, so we're 4 cents above the trigger. To me, that's good enough for an entry. So what I would have done here is either would have got in right at the open, or when I saw it pull back, as soon as it went green on the day, that would have been my entry. Target one was hit immediately. And remember I said about the broadening formations being a signal. You can look right here. The broadening formation was drawn on the weekly chart from the week of May 21st to the week of May 2nd. And if we come down to the 60, you'll see that it hit the broadening formation. Actually, I think this is the broadening formation I was looking at. Let me go back to the weekly again. Yeah, this was a solid line, so that wasn't the one that we're looking at there. I'm going to get rid of this. I'm not sure why 68.83 is there. That may have been an old one from before. I don't know for sure what it is. I'm going to get rid of it to avoid confusion. So this one here was drawn off of, let me see something here. Okay. This broadening formation was drawn off of here. So we can't go by that one. That was drawn after the fact. When I did my video last week, none of this existed. So this broadening formation wouldn't have existed unless it was drawn off. It wouldn't have been drawn off a shorter time frame. I never go, very rarely go shorter than an hourly. So yeah. All right, go back to the 60. So the broadening formation wouldn't have been a good. This would have been the exit for the broadening formation, which is only roughly a dollar move. So you could have looked for either a close below the moving average, which would have been here, depending on what moving average you used. In this case, this is a 10 EMA, so close below that would have been right here. This didn't close below it. If you used a 9 EMA, this may have closed below it, so that would have been your exit. Or you could look for a reversal signal on a lower time frame, which would have been here. This would have been on the 60-minute. This would have been a reversal candle here, which would have been your exit. So that's what I was looking at for Oxy. XLE. So Oxy was definitely a winner. XLE, come back to the 60 or the weekly, and we see on the weekly we had an inside hammer looking for a break above 81.21, and target one was 82.93. Again, we had no further targets beyond that, so we had to use the same process for exiting that one. So here we opened just below it. We triggered it and shot right up to target one. Target one was 82.93. This candle closed at 82.92. Funny how that happens. So you would have been, I mean, I always sell just before my target. So I would probably have my sell order at about 82.90, 82.89, maybe 82.87 even. So I would have been out of this right here. But had you stayed in it and rode it out, at this point I would have probably suggested putting your stop right about here. That's probably what I would have done, put my stop right about here once we got to here if I didn't want to get out. Or if I sold most of my contracts and kept one or two, my stop would have been about the midpoint, just below the midpoint, so probably right around $82. And would have rode it up, and if we would have looked for a reversal on the 60, we would have got it right here. Or if we would have stayed in it longer, looked for a close below the 10 EMA, we would have been here Wednesday morning at the open, shortly after the open actually, which would have given you this opportunity. But I would have wanted to be out Monday, so I would have been out. I most likely would have been all out right here. At the absolute latest, I would have been out here. So XLE was a winner. CVX. CVX. Take a look at the weekly. And we were looking for, we had an inside, what's that called? Hanging man. It's not even a, can't even call it a hammer, but inside hanging man, I believe that's called. Either way, it's an inside candle, bullish. So we're looking for a break above 168.79, target one of 170.97, target two at 174.54, and then same process for further targets. So we got that. We took out both targets. Look at the 60. Come down to Monday. We opened just above it, kind of the same thing as we saw with Oxy. We opened up above it, came down. The low was 168.86. And the trigger was 168.79, so we were 7 cents away from our trigger. Good enough for me. That's close enough. Rode that. Target one's hit. Target two's hit. You can look for reversal on the. Let me see something here. Okay. You can look for. I was looking at this broadening formation, but this must have been drawn later on. So we could look for a reversal on the 60 again, which would have been here, or a close below whatever EMA you're using. In this case, it would have been here. So CVX was a nice winner. Zillow, 60-minute on Zillow, or weekly on Zillow. We had an inside, nice bullish inside candle. We were looking for a break above 41.18. Target one was 44.24. Target two is 44.57. Took out both of those. If we move down to the shorter time frame on the 60, look at Monday morning's open. See, this one would have been a problem. We triggered it, went up a little bit, pulled back into stop out area. This would have been a stop out for me. We broke it again, and then we we kind of kept, you know, kept doing the up downs, higher highs, lower lows, or higher highs, higher lows, until we broke targets 1 and 2. But that would have been a stop out for me, so I wouldn't have been in that one anyway. And I don't know that I traded any of these. I couldn't say for sure if I did or not. If I didn't, I probably should have, because I didn't have a great week. Had a couple of good days, but Thursday I just let things get away from me. Thursday was just too much chop, and I got into a trade early, and I stopped out for a loss, and I was just looking to get back to break even for the day, and it just kept compounding and being stubborn. I thought, okay, I'm going to catch one here, and I stopped out of almost everything, and almost everything I entered that day I stopped out, and ended up losing a lot more than I liked losing in a single day. But so it ended up not being a great week for me, but it wasn't a real bad week. I'm not, I didn't blow my account or anything, but ended the week red, which isn't good. So CVS, we had a bearish inside candle. We were looking for a break to the downside. We got that break. We triggered it, hit targets 1 and 2. We hit 91.47. Target 2 was 91.59. So triggered it and hit 2 targets. Take a look at the 60 again. And here's the problem. We gapped above it pretty high. The lowest we got here was 97.08. I wouldn't have entered this one. It gapped too high above it. So for me, this would have been a no trade. Even if you waited, it never re-triggered. It lost it here, never re-triggered it. So there really was never an opportunity to even get in this trade. Devon Energy. Take a look at the weekly and go to, we had an inside hammer. We triggered, took out target 1, and the same scenario, we had to look for future or further targets by looking at other signs. So here we triggered and we took out target 1, went up to the broadening formation. So this would have been a good exit here if you wanted to exit. If you were looking for a reversal, this would have been your reversal on the 60. If you're looking for a close below the 10 EMA, you would have got out here. So yeah, I probably would have got out most of it here at the top of the broadening formation, and whatever I was still in, I would have been out right here. So that's it for the last week's watch list. A good watch list. CVS didn't offer an entry because it gapped above it and never re-triggered, so CVS never offered an entry. Everything else looked like it would have been good. So yeah, Zillow was one I think that may have, I think Zillow would have stopped us out. Yeah, Zillow would have stopped us out. So we had one loser, one no entry, and 1, 2, 3, 4. Would have had 4 winners. 4 winners, 1 loser, and 1 no entry. So that's pretty good in my book. So good week. Hope you guys made money on it. Hope this helped you out. And please like and subscribe, comment, share, all that fun stuff. Help keep me motivated. And thanks for watching. And I'm going to do my next video on this coming week's watch list here right now. So again, thanks for watching, and let's have a good week this week. See you later. Bye.